Hey babe,
Yeah,
I'm thinking about buying some life insurance. How much do you think I should get?
a couple of million.
A couple of million?
Yes, it'll fit nicely into my plans.
Guys, I didn't think buying life insurance was going to be this dangerous. All right guys, let me give you a quick tip as to how to not calculate your life insurance. Maybe you shouldn't ask your spouse how much life insurance you should get. It may or may not be a very dangerous endeavor. So how much life insurance should I buy? And like a lot of things, the answer is, it depends. Having a plan in place that will take into consideration all of your life events is critical and very important. Although we can't predict everything that's going to happen in your life, we can certainly plan for some of the major issues and major events and the things that could happen. And so let's see if we can help you answer some of these questions. So let's get started. Your mindset changes everything. This video is the next video in a series of videos I'm doing about life insurance in honor of Life Insurance Awareness Month. So make sure you subscribe and hit the bell so you don't miss any of the videos in the series. I've been a life insurance agent and broker for nearly 20 years. I've run my own agency, trained dozens of agents, and helped hundreds of clients with their insurance needs. I have a lot of experience, and I'd like to share as much of that as possible with you. If you'd like to learn the mindset and the belief systems of the wealthy, and learn the skills necessary to live within your means and then grow your means so that you can become financially self-reliant, then you've come to the right place. Once you're gone, you can't be replaced emotionally or physically. However, life insurance was designed to be able to replace you financially so that those you leave behind aren't left destitute. In determining how much life insurance to buy, there's a couple of very important questions to ask yourself. The first one is, if you were to die today, what effect would that have on the people that you left behind? Who would you be leaving behind? And how long would they need to be financially supported? How much debt do you have? Do you plan on sending a child or children to college? And if you were to pass away, would your spouse or partner need help or funding to help make sure that they could make it to retirement on time and with enough money to make it last? These are all critically important questions to ask as you're determining how much life insurance you need to calculate. The amount of life insurance you need also depends on the stage or season of life that you're in. For the next few minutes, I'd like to talk to single people. But if you're married or partnered, don't fall asleep and make sure you stick through this because you might have some friends that need to hear what I'm about to say. If you're single and you have no plans to be married or have children, you're going to probably need less insurance than somebody who does eventually have plans to be married and have children. It's better to plan ahead. If you know while you're young that you're going to want to have life insurance to protect those loved ones, it's better to buy it now while it's less expensive. The important question that you need to ask is, if you were to die today, who would pay for your funeral costs? And if $10,000 to $15,000 would put someone in a hardship, you should have at least that amount of insurance. If you're single and you're older, you might want to leave money to nephews, nieces, grandkids. There's some other reasons why you should have life insurance if you're older. Now I'd like to turn my attention to the people who are married or partnered. If you're married and you have children, you have a great responsibility to make sure that those people that you leave behind are taken care of. Do you want them to go to school, to college? Do you want to make sure that those things are planned for? Do you want to pay for the mortgage? Do you have debts that need to be taken care of? These are all questions to ask. Something that not a lot of people think about is that what if you have a child that's disabled or special needs? You might need to make sure that there's enough money for that particular child for the rest of their life. Life insurance becomes critical in that kind of situation. I hope that doesn't happen, but if it does, make sure that you have a plan in place. So in a minute, I'm going to share with you 3 ways to calculate the exact amount of life insurance that you would need for your exact situation. But if you're getting value out of this video so far, please hit the like button. Now before I share with you the 3 ways that you can use to calculate your exact amount of insurance that you need, I have a question for you. How do you like this scene? If you've watched any of my other videos, you know I'm in a different setting. Put in the comments below whether you like this scene better or the other one better. Now let me share with you the 3 ways that you can use to calculate the exact amount of insurance that you're going to need. The first way is very simple and it's very straightforward. Life insurance is designed to replace you financially. So what you want to do is take your total income, the amount of money that you're earning right now, and multiply that by 5, 10, or 15. Now, how do you know which one to multiply by? If you don't need a lot of insurance because you're not going to have a lot of people left behind that are going to need a significant amount of financial stability and support, then you can probably go with 5. Usually this is what I recommend my clients that are older everything's paid for, their children are grown and gone, everyone's already established. They just need to have some insurance to be able to make sure that their burial and their final expenses are taken care of, and then maybe even making sure there's a few dollars left over for their spouse or significant other, or to give to a charity of their choosing. If you are kind of in the middle there, you would go with 10 times your income. If you're younger and you have a lot of liabilities, like you have a mortgage and you have a brand new family and you're just getting started in your career, I would highly recommend doing closer to 15 times your annual income. That is the simple way to do it. So let's say you're earning $50,000 a year. If you're older, you would probably want to be about $250,000. 5 times 50,000 is $250,000. If you're kind of in the middle there, 10 times your income is $500,000. 15 times your income is $750,000. That's kind of the range on that simple calculation. The next calculation I want to share with you is called the D.I.M.E Method. The D.I.M.E Method is fairly simple. So each of the letters in the word dime stand for something. D stands for debt. How much debt do you have? What is your consumer debt? Do you have any student debt? Do you have any credit cards, car loans? Any debt that you have that's more consumer oriented would go under the debt. So you'd add all that up. Add up all your debt, and that would go under the debt category. The next letter is I, so that stands for income. Now, once again, in the calculation I shared with you earlier, 5, 10, or 15 times, the same would count here. You would take your income and multiply it by at least 5 to 10 or maybe 15 times to determine how much life insurance you need to be able to take care of the loved ones that you're leaving behind. The third letter in D.I.M.E is M. M stands for mortgage. So you would take your total mortgage and you would add that in to the total amount that you need for life insurance. And finally, the letter E. E stands for education. So if you have a child or children that you'd like to make sure that they have enough money set aside to be able to go to public or private schools or colleges and universities, then you're going to need to set aside some money or add that into the total amount that you need for life insurance. So D stands for debt, I stands for your income, which you multiply, M stands for mortgage, which you add in, and E stands for education or college and university expenses that you want to make sure are available to the children that you leave behind. If you don't have children, if you don't have a mortgage, if you don't have any debt, then it's super simple, super easy. Just use the calculation and multiply your income by 5 to 15 times and you should be set. Now, the third and final method that I'm going to share with you is actually a calculator on a website. But while we're moving over to the website, make sure you hit the like button and subscribe to the channel so you don't miss any of the future videos that I produce. Before I show you the calculator, I'd like to take you to this website. This is a foundation that was set up by Pacific Life, which is a life insurance company. They have given $75,000 in college scholarships to children whose parents died who had no life insurance. So I want you to realize that there is a lot of children in the world today that are being left behind. So I just wanted to share this with you. This is a great example of why we need more life insurance. All right, now I wanted to take you to lifehappens.org. Just so you know, this is the company that started Life Insurance Awareness Month back in 2006. So I thought it was appropriate to highlight their calculator because they're the ones that brought life insurance awareness to us. As you can see here at the top is calculators. You want to come down to life insurance needs. So the first question you're asked in this calculator is how much annual income you would like to provide if you were no longer here. So in the example earlier I said, what if you made $50,000 a year? So let's keep going with that particular dollar amount. So $50,000 a year, and you can put whatever your annual income is in there, but in this example I'm going to use $50,000 a year. Now, how many years should income be provided after you're gone? Well, if you have small children, you're going to want to make sure that you have income provided till they become adults. So what I would say is at least 15 to 20 years. Let's do 15 just to show the example. How much debt would you like to pay off immediately? Now this is where you add in all of your debt. Now this particular calculation is including your mortgage. So you take your car, your student loans, your credit cards, and your mortgage, add it all up, and put that number in this category here. So let's just say for this particular example that you have total debt with your mortgage included is $300,000. Now if you don't have a mortgage, you don't need to worry about it. Just put in your other debts. If you don't have any debts, then you can put 0 and you can skip this altogether. Now, how much would you like to provide for childcare? If you leave behind a spouse or significant other and a child, that significant other may need to go back to work, may need to have a career change. They may need to get new training so that your child will have to be in a daycare or in some kind of childcare so that your spouse or significant other can be trained or retrained into a new career that will allow them to support themselves. I recommend at least a year's worth of childcare at $10,000. Now, how many children require college funding? If you want to pay for your children's funding, you would add each child here, however many children you have. If you don't, then you would skip this altogether. But let's just say that you have one child, and that child is 3 years old, and in 15 years they're going to be 18, and that you provided enough income to have that for 15 years. And you want to send them to a public college. And I live in California, and California is the most expensive state usually anyways, so let's just use that. If you plan for the most expensive and you get something less expensive, you'll be able to keep the change. Now, how much would you like to set aside for an emergency fund? So I would suggest about another $10,000 would be fine. Usually 3 to 6 months of whatever the expenses are in the home, that would be a really good emergency fund. $10,000 seems like a nice round number. Now, this category will take into consideration the amount of life insurance you already have. Or if you have no life insurance at all, make sure you put a zero and move to the next section. So here you have the total, $1,099,523. That's probably a lot more life insurance than you thought you needed. This is somebody with $50,000 of income who has one child that's 3 years old and a spouse they want to take care of. That they want to make sure that that child is taken care of until they're 18. They want to put aside some money for college. They want to have an emergency fund, and they want to make sure there's about $20,000 for burial costs. The average cost of a burial is between $8,000 and $12,000, so $20,000 isn't too far out of line. So now that you know how much life insurance you probably are going to need, it's time to take a look at the budget and see how much you can afford. My recommendation is if you can't afford the exact dollar amount you need, start with what you can afford. You can always add more life insurance later. Remember, I've never had somebody tell me that they got too much life insurance when their loved one passed away, but I have heard way too many times people say, we should have bought more. If you don't have a life insurance agent that you trust, or a family member that can refer you to a life insurance agent that they trust, reach out to Financial Self-Reliance at hello@financialselfreliance.net, and we'll see what we can do for you. If we can't help you, we have a network of agents that we can refer you to. Make sure you subscribe to the channel so you don't miss any future videos. And if this is your first video, go ahead and watch the last video that I did to catch up. I look forward to helping you manage, protect, and grow your money and income. We'll see you on the next video. And becomes financial. I shared with you the 7 reasons